of Massachusetts is recognized.
Thank you, Mr. Chairman. So in 2009, Congress passed the CARD Act to crack down on banks and other credit card issuers that were abusing consumers with excessive late fees and bait and switch terms, like those low initial rates that once somebody signed on the dotted line really jumped up high. The CARD Act slashed average late fees by a third to $23 in 2010. But by 2022, 12 years later, by exploiting loopholes in the law, that number was back up to $32, enough to make the biggest credit card companies an extra $14.5 billion in profits that year. Meanwhile, average credit card APRs have nearly doubled over the last decade, from 13% in 2013 to 23% in 2023. That is the highest on record. Now, as credit card companies have grown their profits through interest and fees, they have also become more concentrated, with the biggest issuers gobbling up the smaller ones. In 2022, the 10 biggest credit card companies in the country accounted for 83% of all credit card loans. Mr. Rust, you have studied the credit card market for years now. Can you say something about how the smaller credit card issuers stack up versus the biggest issuers in terms of how much they're charging consumers, the big guys versus the small guys that are still left?
Thank you for that question. And actually, I was really hoping to have the opportunity to say that CFA and the CFPB have pointed out that interest rates at smaller institutions, small credit unions, are lower, right? And this has to do, I believe, with the fact that the credit card market is somewhat broken, because the way that people are comparison shopping, when they say, I would like to get a credit card, it doesn't take them to the small bank. It takes them through a comparison shopping site, a lead generator that's earning large amounts of fees, to direct them just to the cards that have the highest rates. And we're seeing margin on margin issues where the amount of the margin is growing over time. It's never been higher. And credit card issuers that are larger are charging interest rates that are 8 to 10 percentage points higher now.
Wow. So the big guys with the highest paid CEOs are actually charging consumers a whole lot more than the little guys in the credit card market. And it's the big guys who are hitting particularly hard on customers' pockets. Mr. Suero, you're an expert on predatory lending practices. Who's paying the bulk of the interest and fees that are driving credit card companies' profits?
Yeah, so there's a number of different ways to look at it. CFPB has found that consumers with deep prime, subprime credit scores are paying a disproportionately high amount of fees. We know that that population are generally lower income, working class people of color. We know from our surveys, we know from other consumer surveys, this has been reflected over time repeatedly, that low-income people disproportionately pay these. Latinos, Black consumers also are disproportionately paying these fees.
Okay, so people are paying more, and you know who is paying more, people who are struggling the most. Now, the CFPB is taking action to rein in price gouging in the credit card market, including by capping most late fees at $8. Obviously, very good news for American families. Of course, we know who's not happy about that: big credit card issuers and their Republican friends in Congress. Last month, Republicans introduced a bill to overturn the CFPB's credit card late fee rule so that the credit card industry can continue squeezing every last dime out of these consumers. One House Republican even said, quote, "The vast majority of Americans support these fees." So, Mr. Rust, I have to ask, do you know anyone who is actually a consumer who loves junk fees?
So I have never heard someone say, oh, I paid an overdraft fee and I'm really glad that worked out.
Yeah, that really worked out well for me. I have never seen the bumper sticker, "I heart junk fees," right? How about you, Mr. Suero? Anybody you know? who is excited about being gouged by a multi-billion-dollar bank?
No, obviously not. And I want to add two things. One is the CFPB received 57,000 comments from this. A vast majority, or a large number, were from consumers that were saying quite the opposite, that they were fed up with these fees, that they didn't want to pay them, they were very unpopular. The opposite is also true. If you ask consumers, how would you feel about a product that doesn't have such high late fees or low fees, they look at those products very favorably, and they actually have more goodwill towards financial institutions if they were to be offered those products.
Well, I'm really glad that the CFPB is taking up the fight on behalf of consumers and willing to stand up to these big banks. Thank you. Thank you, Mr. Chairman.
Senator